Guys, welcome to this video. In this one we're going to run over the S+P 500 E-mini futures market. Done some great calls lately. We've just seen Fed's Jerome Powell say a couple of things which weren't too preferable for various markets, and mainly talking about inflation and speeding up rate hikes and everything like that. So you can see really this slowdown is extremely prevalent and clear. The market took that news. Okay, it got thumped, right? You can see that quite clearly on lower time frames like the one I've got. Okay, the market gets thumped down here, and this is just showing you that there is very weak impetus to the upside. Now, normally on falls, people are looking, if they're trading the right way, to scale in the opposite side of the market to the long side in this case after that short fall. And it's no different really this time. We're looking to do the same thing, and we're looking to do it around key PA levels, of which I'm highlighting now. So you can see at this current level that I'm showing you, room to move slightly beyond this previous candle wick. Okay, so this previous candle wick stretches down here, and it stretches around that 3950 level to 3925. So about 25 points of a stretch in that last wick. Now, when you do arrive around that same level again, you're going to need to take light risk because you've already hit it once, and the sentiment around the market isn't strong to the upside either. So you're taking on risk, therefore your size naturally needs to be lower. Now, if you zoom out to the higher time frame, something really interesting happens that I was looking at. If you look at your 200 MA, you can see it's so far off the level we're at now, and you're only just in between those 20 and 40 MAs. So there's a good chance that this will retrace further. Okay, and if you're someone who is an investor and you like the US markets and you want a much better market value price, and you're an investor, as I say, you're not really a day trader, this level is going to be ideal for you. You would need a dramatic fall and probably a very harsh change in market sentiment, something continuing what we've just had already. If you're going to get long and you're risk averse, you want to do it there. If you're a little bit more confident, perhaps you're in my academy or you're someone who knows what they're doing a bit, you might want to hold off your longs at the earliest until 3/8/30. Okay, so a considerable way down, but not as much as I previously noted. This level here is a little bit weak. I mean, I really would avoid trading it if you can. As I say, it might get you a very light long with early exit, but there's no margin around here. The levels of PA are very tight, and thus you're probably better off letting price come to here, because you can see former PA levels to your left-hand side. So at every time, we're just looking to take levels that are good for price action, and they're good for us to understand where buyers are moving in the market. Any short side trading, you can redo at previous highs, the ones I'm now labeling. Okay, and that you, me, and everyone in between can agree that that's a sell zone. Why is it a sell zone? Well, because the price has come down from there previously. You can note that from these candle wicks, and it brushes off on one of your key MAs, and it coincides with former price action levels too. So there's bundles of reasons why I would take it short at that point. But as I say, if market sentiment does continue to the downside, it probably is a good idea to prepare for a black, well, it would be seen as a black swan by a lot of people, but the ultimatum that could occur, and that is a much larger drop. So just be wary of that. That's why I'm doing this video. Be careful. Okay, if it happens or not, it doesn't matter whether it does happen or not. We're going to trade factually and trade with price action and risk management rules anyway. But it's just preparing you so you know where the market can go. Because at the end of the day, we're so far off those moving averages still. Okay, and the market sentiment isn't great. They're not saying how wonderful the economy is, the global economy, the US economy. They're not saying it's great. Okay, so just be wary of that. Maybe you'll get back to your 100 MA in the nearest-ish future.